All right. So now the first I want to talk about, okay, is one way I actually get very good sniper entries is by refining my entries. Okay. Now I would assume, and I actually expect that this in this class I already have quite experienced traders. So it's not a beginners class that I have to start explaining and talking like I'm talking to a set of beginners. Now, one way that I actually get very good sniper entries is by refining. I refine my entry methods. Okay, when I actually want to get sniper entries and I want to get very good risk to reward ratios. I refine very well. Okay. And I'm going to be telling you what I mean by refining my trades. Okay. Now, basically, what I mean by refining trades is that I do what we call the top down analysis, something that traders are already familiar with. Okay. Now, that top down analysis is basically I start from the higher time frame, be it daily time frame, be it 4 hour time frame or 1 hour time frame, and I refine it down to as low as 1 minute or 3 minute time frame. You might be asking me, how do I do that? How are you able to do that? Don't worry, I'm going to show you how I do that. I'm going to show you how I do that. Okay. So I basically refine from the higher time frame down. I wait and I refine until I get very precise entry. Okay. So let me give you an instance. Okay. Now let's take for instance. Okay. We have this structure right here. Okay. Now this is the 4 hour structure. All right. Now let's view it from maybe 2 hours to have a better view of it. Now this is a 2 hours time frame. Okay. Now, mind you, okay, entries is one of the final stages of your trade execution. Okay, have that at the back of your mind. Trading, trading entries, okay, is one of the final stages of your trade execution. Okay, it's one of the
my class. I'm a class. Class. No, this week. This week I have class. Maybe the
I'll remove it on the group chat now. Any obstruction, and I'm going to remove the person. Please, so everybody should mute your mics. Everybody mute your mics. Any obstruction, and I'm going to remove the person. All right. So what was I even saying? Oh, I don't like distractions. Okay, I was saying something. I said entries is one of the last stages of your trade execution. Okay. So basically, you must have the understanding of other concepts like liquidity concepts, order flow, um, um, trend, other basic concepts, market structures, and the rest. All right. So now I'm going to be explaining like you already have that knowledge because this is not a full class. I'm basically just teaching entry. Okay. So now looking at this structure currently on gold. All right. Looking at this structure currently on gold. Okay. We can see that what at this point we are beginning to have guys, give me a minute. I'll be back shortly. Just stay on the call. Give me 1 minute. I'll be back. All right, guys, I'm back. I'm back. So I said, looking at this um gold price action, all right, you basically see that price started to go up, all right. So we are trending to the upside. Okay, you basically see that price started to go up and the whole stuff started happening and it turned to the upside. All right. Now, basically, what I want you to observe is at this junction or at this point here, we had a break of structure. All right, fine and good. So this break of structure leaves us with what? Where is going to be our higher low? this point right here is going to be our higher low. Okay. Now, at this point, something happened here. Okay. Look at what price did here. All right. Now, we don't want, okay, let me use that. Okay. So, price broke structure here, went up. Okay. Retraced, tried to go up, but it failed. Okay. It failed. It came down again, tried to go up again, and it still failed. Okay. Now, mind you, okay, looking to the left, we have a supply region somewhere around here. We have a supply region somewhere around here. Okay, so it was pushing price down, and as a matter of fact, you could have even gotten a sell here, but I don't want to talk about that sell because following the movement, the price was actually buying. Following the movement, price was actually buying. Okay, so I don't want to actually talk about that sell. Okay, so now this actually happened now. Okay, this low failed, the second low failed, and if you see this, you should already know something is building up. And what is that thing building up? It's basically liquidity. Okay, so now liquidity is what building up. Now let's go down to the 1 hour time frame. Okay, now on that 1 hour time frame, you can see okay, clearly liquidity is building up here. Now, what do we have at this point? We have this other block here. Okay, we have this other block here. Now, seeing this, because by this time, by when you're analyzing this before price actually will sell to this point, okay, this rejection had not happened. All right, so we're going to be looking for N3. So let's go down to the 3 minutes time frame and see if we are actually going to be if we actually would have gotten entries. Okay, so now we know that this other block here is our point of interest. Okay, please, if you're following, okay, just drop in some emojis. Let me be sure that you guys are following. Let me know that I'm not talking to myself. If you are following, if you are understanding, please, if you are following, drop in emojis. Let me see. All right, that's good. That's good. That's good. All right. So, like I was saying, okay, this point of interest here, this point of interest here. Okay. Now, what am I talking about when I talk about refining? Look at what happened here. Though other traders might have considered this breaker block, because as a matter of fact, if you looked at this from the 30 minutes time frame, I'm pretty sure you'll have seen quite a decent breaker block there, which happens to be this. Okay, fine and good. You can actually still use that. All right. Now, talking about refining, okay, we want to see a mitigation, and this mitigation actually happened here. Now we want to take entries here. So I'm going to go down to 3 minutes time frame. Okay, 3 minutes time frame or the 1 minute time frame. You see how we've come down from 4 hour time frame to 1 minute time frame, have you? Now on the 1 minute time frame, what am I going to be looking for? I'm going to be looking for a, a signal, something that is signaling me that we're going to have a change of trend. And what is that signal? A market structure shift. Some traders want to call it coach, whatever. It's still the same thing. Okay, we want to call it a change of character or whatever, but it's basically still the same thing that we're talking about, that market structure shift. And if you zoom in, you would clearly, okay, you will clearly see that market structure shift here, which happens to be what? Okay, now at this point, you have what? Lower low, lower high, lower low here. Okay, now to this lower low here, we have this lower high here. Now, this lower high, okay, the break of this lower high gave us a market structure shift. So price retraced, okay, price retraced and price mitigated this other block right here. So following this now, how would we have taken entry? It's going to be here. It's going to be here. It's going to be here. All right. So your entry is going to be what? At the mitigation of this other block. All right. Your entry will be at the mitigation of this other block. And your take profit could just be at previous high, like this. And that way you've been able to refine. you've refined down to the 1 minute time frame. So if you wanted to take profit using the 1 minute time frame, fine and good, that's almost a 4 hour trade. Okay. And if also you wanted to maybe have used maybe the 1 hour time frame or 15 minutes time frame, you still would have extended it to this previous high because this is an uptrend and this high ought to be taken out, which it actually has been taken out. So this would have been a beautiful 5 hour trade. You get, so that is it basically. Now you see how I've been able to refine from like my 2 hours down to my 1 hour time frame. You see, from 2 hours time frame, we analyze structure. Okay, we spotted out this liquidity region. Okay, we identified our point of interest. Then we went down to the 1 minute and 3 minute time frame to look for this signal to go bullish. That's it basically. That is basically one way you can actually get sniper entries. Now look at how price tapped into your order block. You can see, and this is the 1 minute time frame. So it basically means you are not in drawdown for up to 2 minutes. Not even up to 1 minute, because in less than a minute, this candlestick went up to close. So you are not in drawdown for up to 1 minute. So when you see me catching trades like this could actually be one of the strategies I used to actually catch that kind of trade. So what do you guys think? What do you guys think? Should we take one more example before we call it a night?
Yes, please.
All right, all right, all right, all right. So let's look for one more example. Okay, one more example. Maybe should I use the sell that actually occurred here? Okay, I'll still use the sell that actually occurred here anyway. Anyway, guys, I have a mail. All right. Now using the sell that actually no, let me not use that sell. Let me look for a different let me look for a different chart to explain this. Hmm. All right, now this is GBPUSD. Um, this is GBPUSD. Okay, let's start from the 4 hour time frame. Let me explain something. All right, now this is very beautiful. Okay, somebody is asking for passcode. Which passcode? I did not put any passcode on this meeting now. Guys, just hold on. Let me see if I can actually send someone the passcode. There's no passcode for the meeting now. Uh, all right. So basically, okay. Now, if you look at this, let's analyze this buy here. This buy that actually happened here. Okay. Now, first we're going to start with structure. Okay. We are what on a bullish order flow. So price was trading up. So at this point, you have what? Have you have this break of structure right here. Break of structure right here. All right. Break of structure right here. Another break of structure right here. Price took out this low, took out, but basically the major structure that we have here is simply this high, low, okay, high, low, and then now there's something called the three drive pattern, but that's not what I'm basically talking about today, okay? So these are the major structures that we actually have here, all right? So we have this break of structure right here. Now this tree drive, okay, or these three breaks of structure, all right, leaves this low vulnerable. So it leaves this low more like a liquidity. Okay. Now, one thing I want to take note of this demand region. This demand region here. Okay, it got mitigated. All right. Now, this low mitigated this demand region here. It pumped up. Now, one thing that actually makes that entry pattern kind of good is that it can actually save you from traps. So you might be asking now, assuming now, just assume maybe you used the 1 hour time frame. Okay, let me go down to the 1 hour time frame now. Just assume, okay, use the 1 hour time frame entry for this kind of a trade. Use the order block entry. Now, your entry would simply have been here for instance, okay, your entry would simply have been here, and your stop loss would have just been beneath the other block. And if you had done that, you most likely have been stopped out. Okay. But now using this entry strategy now, okay, you've been able to analyze market structure. You have a point of interest. Someone is asking for passcode. There is no passcode on this meeting now. You not put any passcode on the meeting. Anyway, like I was saying, okay, um, okay, now you've identified your point of interest. Okay, so basically now what this entry style okay requires is that we observe price reaction at that our point of interest. Okay, we observed price reaction at that point of our interest. You get so basically price taps into this point of interest. We are looking for what signs to go bullish. Okay, we're looking for signs to go bullish. Now, sometimes it can actually fail. Okay, and I'm going to show you how it actually failed here. It failed there because if you were looking for that and you saw it actually played out first. You see, at this point here we have what MSS market structure shift. Okay, and coming down, you will have actually taken this to be your liquidity, internal liquidity, and maybe used any of these wicks here for an entry. And you actually will have been stopped out on this. Okay, you actually will have been stopped out on this here. Now, you look at the bigger picture. Okay, now on the bigger picture, you have a bigger market structure shift. Now, there is something called liquidity sweep. All right. Now, that liquidity sweep it basically happens like this. If you have a high like this, all right, and price forms a low, and then you notice that price sweeps above this high with a wick. Okay, if buy side is taken with a wick, most of the times you're going to have sell side liquidity to take in before price continues the usual way. This is more like a liquidity trading, should I call it the principle or whatever, but it's just something that if you actually notice a lot, if you observe your chart a lot, you notice that it actually plays out. If price, okay, maybe let's assume this is on downtrend, usually actually is on downtrend, all right, and then price sweeps above. Now, I'm not talking about a break of structure. I'm talking about a sweep. Now, what is a sweep? A sweep is simply something that is simply something like this. When you have a weak, all right, when you have a weak break of structure, not a candlestick body, a weak. When a weak sweeps above this high, all right, most times you're gonna have price take out the sell side liquidity, and that is actually what happened here. Okay, you can see that if you looked at the maybe 5 minute time frame, or let me say 15 minutes time frame, if you looked at the 15 minutes time frame, it happened to be a break. And honestly, if you are taking this trade, I wouldn't have blamed you because it looked very neat. That is why you cannot actually predict 100% because even after the break, you won't have liquidity that actually justifies your entry. You get, but on the 1 hour time frame, we saw this to be a sweep. So price broke above this, all right, swept the high and still came down to break above structure. Now, where this thing also happened, or where the next confirmation came, is when price went back up, all right, and then gave us that structure shift right here, all right, broke above this high, came down, retested this demand, and then bought. Now, there is a way I set my stop loss when I'm taking trades like this. Okay, if I understand that from the higher time frame, okay, I have external range liquidity. For instance, now this is my external range liquidity regarding this setup. Okay, and I'm using my this confirmation entry because this kind of entry is called the confirmation entry. If I'm going to be using my confirmation entry, regardless of how much I refine it, okay, most times I will prefer to still put my stop loss few pips below my external range liquidity. So the thing here is that even if I had used this first entry here that stopped us out, if our SL would have been here, Okay, because of that, my external range liquidity entry, stop loss placement, I will have placed my stop loss at few pips below my external liquidity here. Okay, and then my take profit at wherever, maybe 3RR or so. And you notice that even with the drawdown, even though it shall hit my stop loss here, because if you're placing your stop loss here, it makes your entry aggressive. But if you're using the external range liquidity, it makes it conservative. Okay, so if you want to do 1RR, maybe 11RR or 12RR, you'll be doing small stop loss and you're going to get stopped out maybe a number of times. But if you just want to be a professional trader and just trade conservatively, you will get fewer stop losses, but you might just be getting 3RR, 4RR, 5RR. But if you're going to be strict with your stop loss, having tight stop losses, you're going to have up to 9, 10, 11, 12RR. Okay. But personally, me, I don't really care about a lot of RRs. I just want to have a good and a profitable trade. So I would have done something like this, or maybe even something like this. Why? Because I'm considering this point of interest and this other block, this tiny other block that happens to be on the 1 hour time frame. It can even draw price. And what if then price wants to mitigate it? Okay, so I would have actually put my stop loss at external range liquidity, either here or here. All right. And then you can see with this, if I actually target this high, I'm going to have 3RR, like I said earlier on. So you're not going to be getting a lot of RR anyway. So I've been able to explain this entry pattern. All right. So any questions? I'm going to be taking questions now. Any questions? Any questions? If you have any question, indicate in the chat box. You have less than 5 minutes. All right, I have a text in the chat box.
Can I speak?
Yeah, go on, sir.
All right, thank you. Where's Demi? So I'm
Okay.
looking at wicks and candle bodies. When it comes to break of structures, we consider that the candle body is involved. And when we're looking at liquidity grab, we look at the wicks. But the thing is, it depends on time frames. If I'm looking at a wick damage on 1 hour and I go to 15 minutes, just like the way you spotted
I'm sorry, please
on
come
this
again,
GBP.
come again. Start again, please.
Okay. I'm looking at wicks and bodies as
Okay.
it relates to break of structures and liquidity grabs.
Mm-hmm.
GU trade that you analyzed.
Mm-hmm.
The we There's a week the week break of structure you took was on the 1 hour. On the 1 hour, you see that it was a week that's not like a grab, but if you travel down to the 15 minutes time frame, it's a body
The
break.
body, yeah.
So at what time do you now determine what time frame to know if it's a grab or it's a structural break?
All
It's a
right.
bit confusing for me.
Now I'm going to give you two solutions. Okay. Now, if you zoom in, even on the 15 minutes time frame, okay, what actually broke above the high first? Look at it here. It's a week.
Okay.
You see
Yeah.
it, Abby? But let's
Yes.
assume maybe you're not keen enough to actually know this. Okay. Then you're gonna that's where that stop loss rule I ended up talking about with will save your ass. You understand?
Okay.
You get the point now, okay? Though, if you actually zoom in enough, you're gonna see that a week actually. So you know that the break of this high is not really a strong one because now week first break down. You understand?
Okay.
You understand? But if
Okay.
we had a straight body, something like this, like look at this break of structure here now, straight body, no one come back up again later on. Do you understand?
I'm getting
This
you, sir.
yes, this break of
All
structure
right.
here, is a body, full momentum. You understand? Let me look for maybe a similar example if you are able to see one. For instance, now look at this. Look at this one here. Look at this break of structure here. You see, it broke with a week first. Then bodies came, but it's later reversed.
Mm-hmm.
You get. But whenever
Oh,
we had
yeah.
whenever we had maybe a complete break of structure, as far as it's in line with structure, it's sold at least for a significant period of time. But just at all, because you most times you might not your attention might not be so down to that point where you can actually figure it out. But I usually advise my students just stick with putting your stop loss at external range liquidity. That external range liquidity now is that if price reaches that liquidity point, it basically means that your bias is wrong and price will most likely change direction. You get anything now we dey make price sell down to actually hitting of the stop loss here. It majorly will mean, or it will mean that most likely price will want to go bearish. That's
Okay.
basically the point of external liquidity or placing your stop loss at external liquidity. Anything that makes price reach that point, then price has a high probability of changing trend against your initial bias.
Okay.
I don't know if that makes sense to you.
Yeah, that's fine.
All right. So anyway, I think that'll be the end for class today. Okay, I'll send the update on when next we're going to be having a class. Just tell me how the class went for you in the group chat. I think I'll open the group chat this just after now. So tell me how the class went, and then let's see how it goes. I'll send an update for the next class. All right. So have an amazing time learning. Have an amazing time trading. It's King, and I am signing out.